Good afternoon, Andrew Benioff with Llenrock Group and the Llenrock blog. Here today with Alex Topchy, Chief Financial Officer of Broad Street Realty. Alex is joining us actually from the Bethesda, Maryland area, which is a departure for us. Most of our interviewees are from here in Philadelphia. Alex, thank you for joining us.
Thanks for having me.
Appreciate it. Alex is, as I said, the CFO of Broad Street Realty, where he's responsible for underwriting and analysis and also financial performance of potential acquisitions, as well as overseeing all the financial aspects of Broad Street's existing real estate portfolio. Alex, in recent years, two asset types that you work with, retail and office properties, have suffered from lowered demand in many parts of the country. Has this been your experience, and if so, how have you adapted to those changes?
It really has, and DC has not been unaffected. Office and retail both, in different ways, have been affected by the demand. So for office, it's really the issue is the age and location of the property more so than it's ever been in the past. Trophy office buildings in downtown core locations have been trading at all-time highs, where properties that are even 10, 20 years older have been really suffering the loss of demand for space. So the growth in the trophy buildings has really been at the expense of older buildings, and that's really where the issue is. The growth is not coming from, or rather the demand for tenant space is not coming from an increase in the market, it's coming from the change in the office users that are out there and what they're really using the space for. As far as retail, there's not really a loss of demand for space. The tenants are trying to get into space. The problem that they're having is the independent shops is they can't finance their business. So if they want to expand, or if they want to open a new store, they can't find the business financing and the money to do that. So we're having to go to different options. We look for more creative ideas to use our space. There's medical use for one. That's an example of different use. Some dialysis treatments or outpatient treatments have been going into some of the retail centers. We have a bingo parlor in one of our centers that's doing a phenomenal business, and that's been very successful. So you have to be creative, and you have to find different outlets, different demand people to come to your space. And, the anchor space has not been unaffected as well. It used to be kind of a cliche. If you had a grocery store in your center, then all your worries were over, and you can just you collect your dividend every month. But that's not the case anymore. Grocery stores are now competing with the likes of Walmart and Target, and even CVS and dollar stores are now expanding their grocery options. So those are competing, and a lot of times these stores are in the same centers that the grocery stores are in. So there's a lot of different factors. So to get to to make a long story short, the way we now have to strategize, we have to underwrite the grocery stores much more intensively and figure out what their competition is and how likely they're able to stay in their space. And we're not just relying on how much term they have left and the credit of their corporate. So that's what we've got to do.
Wonderful. Okay.